As the pandemic has ebbed and the supply of semiconductors has greatly improved, the production and sale of passenger vehicles has hit the fast lane in India, and it rose to new levels this August, year on year. Led by SUVs, PV sales may continue their strong performance in the festive season. Monthly sales data released last week showed that dispatches at the top 7 passenger vehicle makers rose 30.2% year on year to 3,05,744 units from 2,34,743 units. With the exception of May, when the growth came on the back of a low base effect, this was the sharpest year-on-year growth witnessed in FY23. Note that auto firms count dispatches to dealers as sales. Shashank Srivastava, the executive director, sales at Maruti Suzuki, expects the industry to end FY23 with a record 3.7 million units, which would be almost 21% more than FY22. Clearly, the sector is in the middle of a passenger vehicle sales boom that is likely to continue in the coming months. Maruti's August dispatches in India grew 30% over the corresponding month a year ago. According to Srivastava, the growth trend appeared to be strong, but performance going forward would be decided by how production pans out against underlying demand. He cautioned that while the chip shortage situation had eased considerably, some uncertainties still existed, particularly for specific models. Up to last week, the pending bookings at Maruti Suzuki stood at 3,77,500 units. But the real question is, how long can the sector expect this party to last?
I think August has been an outstanding month. And this is in spite of the fact, that if we see globally, the markets are down, roughly 7%, whereas, India as a market in this year has been up by roughly around 16%, typically cars. It's primarily on account of pent-up demand. Obviously, that's one big reason. I think this year we are obviously optimistic because we are sitting on, very low inventory in the network. Pent-up demand is still there. We have introduction of, a lot of models, from most of the OEMs, but nevertheless, I think currently the economy is getting into a kind of a cautious, stage. And, that is because, we see all the high frequency indicators, for example, the crude oil prices are very high. Exchange rate is really hitting hard the auto industry. And then, the biggest setback is the inflation is very high, which means that interest rates are going to be, really on the top, as we move into the 2023. So obviously, I think the party should be over by 2022, and 2023 as we enter with a lot of new challenges.
Srivastava added that the August sales trend indicated that while growth momentum was continuing in the SUV segment, it had plateaued for sedans.
In a mini, SUV also, we have a few options, then subcompact, then compact, then mid-size, so obviously all this is leading to a boom. So nevertheless, again, hatchbacks will be a very important segment in India always. So sedan, currently is losing the pace and is losing to obviously hatchbacks and SUVs. We may be seeing a few good, EV options in sedans, in coming years, which will again give a flip to the sedan segment.
Tata Motors saw its PV sales continue the strong run of the previous months with a 68.3% year-on-year jump in August. Mahindra & Mahindra saw continuing momentum thanks to new SUV launches, with sales advancing at a brisk pace of 87% over the corresponding month last year. The Scorpio N, Scorpio Classic and Bolero Max pickup models have been driving the volumes. Sales at Toyota Kirloskar Motor increased by 17.12% year-on-year in August. According to a company executive, the Innova Krista, Fortuner and Legender models witnessed unprecedented customer orders that month. The company recently said that it was putting a temporary freeze on orders for Innova Krista's diesel variant, as the demand for it was huge, leading to longer waiting periods. Struggling for years, two-wheeler sales also saw a year-on-year uptick in August, though it came on a low base. The increase came as companies dispatched higher numbers ahead of the festive season. In their case too, an easing in the chip shortage helped increase production. The good news in August comes after a long spell of difficulties for the industry. In 2017, things began getting hot under the collar for auto firms. For starters, growth was affected by the implementation of the goods and services tax. Second, just before the COVID-19 pandemic struck, the industry was worried about the imposition of BS6 emission norms, which would mean increased prices for consumers and significant investments by firms in cleaner technology. The onset of the pandemic almost came as the last straw on the camel's back. Factories, showrooms, and supply chains were shut down overnight due to the lockdowns. Auto firms had to scramble to adapt and survive. It's been a long road to recovery. Given the role that pent-up demand has played in the August sales figure, the boom will end in some months, and experts project that the industry will feel the pinch next financial year. It remains to be seen whether fuel prices and inflation will ease sufficiently by then and provide some relief to the industry.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.